Good morning. Welcome to OptionsTender. It's Friday, January 24th, 2025. Welcome, traders. We're going to go through just our regular evaluation or analysis on the market, starting off with SPX and going to SPY, and we'll go down to lower time frames. We just want to clean up some price action. Not a whole lot has happened since yesterday, but I want to give you a couple scenarios of what next week could look like. I think, just to tell you, ahead of time, that things are going to be volatile. That could be simply sideways volatility from overnight earnings, pops, drops, and FOMC of all kinds of data coming out. So we could either form a weekly doji indecision that could be very wide, and that could be our reversal candle, or we could get a big red bar, but I think we're reversing next week. Either way, do we get follow through the week, or do we need to wait till the week after in order to? So I'm going to show you on the lower time frames how I'm going to play this. And a good question was asked, and in the Qs, where do you think they finish next week? And I'll show you down on the lower time frames. Okay. So we're doing this intraday at 11:45 a.m. If you are interested in getting these videos intraday, consider becoming a YouTube member. It's only 99 cents, comes with the Discord and the trade alerts. So we have a good time in there and discuss a lot of our trades, and there's a lot of great feedback from individual traders. So let's jump into it. We have SPX on the monthly time frame. This is just a reminder for all of those that are just now joining the channel that this is the 1929 top, 2000 top, and this is going to be the 2025 top here. All right, high probability that the top is or is near within a few points done. And we're right on the confluence of the trend line I just talked about and the 2008, 2021, and 25 top. All right, we're not going to talk about targets. That was in yesterday's video. Let's go over to SPY. And we'll just go directly to the weekly. On this weekly time frame, same thing. You're seeing back test of that trend line once again. Now, here's where we talk about. Now, the day's not over. So can we somehow collapse at this point? News, anything like that? Anything could happen with the new presidency. If you traded through 2016 to 2020, things, just with a simple tweet, things can happen immediately. And there's a lot of news kind of flowing in. And so things could spark at any second. So you always have to be ready. And so this is our weekly candle so far. Let me dig it. Well, while I'm here, I'll just show you. We got a higher high, just like we did already in SPY. And you notice how at the top of that range, SPY poked above, and then the week after, so it had a doji candle. Do we get a doji candle next week? Okay. And then price reversed the week after. That's one way to look at it. Or simply today, do we get end of day sell-off where we form a reversal candle? Or even next week with all that volatility, do we get a big red engulfing bar? Okay, any of those are possible. With that said, again, I'll show you on the lower time frames how I'll play that situation, or any of those situations. You want to take profits as you go. We have the 20-week moving average, held on to that, bounced one more time. You see the theme here. 20-week is so important. Do I think we break that next week? I doubt it. That's a huge move, but anything's possible, and we talked about that again yesterday. So let's move. Well, first of all, when the market starts to turn, the first big objective is here, the 561.48 area. There's about a 10-point area above and below that could show a reaction. You have the 50-week that's at the lower end of that range. And notice also the time and price first of all, that level rejected off twice, so that shows the importance of that level. I do think we'll backtest that. Is it next week? Highly doubt it, but it could. We have this arrow pointing what happened in 2000. We had a 15% move in 4 bars. Okay, that's 4 weeks. Now, with that said, we have this cluster here from the beginning to about the middle of February. Okay, this is the weekly time frame. So when you have a time price relationship, that's for the week, not for a specific day. So we're looking at approximately, let's just call it the middle of February, about the 17th. And I know that's exact, but there's a reason for that. And if we literally started next week with a move down, that move could be possible. Okay, if something happened to where prices starts ripping to the downside, it's still possible to actually dip that fast and that hard all the way to this important level, which was a former 127 resistance that got above and acted as support. Okay, so that's not out of the game. I just want to warn that that's an outlier situation. That's not typical. But if this is the start of a recession, things can happen quickly. So we'll look to see where price is when the time and price relationship happens. If we're up above and we're still grinding to the upside going into this cluster here, then we'll look for a reversal to the downside. On the daily trend is our friend. This is our new major trend line that we're looking out for. It's the bright white one. This is the 200 moving average, but I'm looking at the trend line here, and that's going to be very important for these moves. Now on the daily time frame, see, this is where it comes from. If this is a doji candle or indecision candle, and this is our reversal, maybe evening star, whatever you want to call it, and we start getting the reversal on Monday, then it's very possible that we could have that bearish engulfing candle. And this was our flag breakout. By the way, we talked about them yesterday. These are scenarios that have happened in the past starting a recession. These are how fast and how steep they can move. Okay, this was the bull flag that we're looking at, broke out of, and then now we're back to the 1929 trend line and the 2008 trend line confluence. So I don't think we'll go much further than that. If we get on top of there and continue to work our way, that would just be, it would end up being just a really slow grind, probably gapping up each day, not doing a whole lot. That, in the situation, that would be a wave 3 brand new market, and it just continues to grind higher, super slow. Now, what's more likely is we get a drop next week into a back test of this bull flag breakout. Okay, so we'll look at that 50 and 20 moving average, but also the flag. Okay, so I'm looking for a reversal at minimum back here and possibly to that trend line as well, right? So that would be the area where price should hold. If not, it breaks down, then we possibly have one of these scenarios playing out. Okay, now what I think is more probable is for the weekly candles to get some sort of doji. So if we get a nice sharp move down to back test here, then we probably get a nice bounce as well. So that would be a 1-2 setup. But in the traditional look here of technical analysis, we probably get some sort of equilibrium. You'll be able to draw a triangle here between that major trend line and the bounce. Probably a deep bounce, draw a triangle there, and then whether we'll be looking out to break to the upside or break to the downside. That's what the play should be. So that's a more likely situation, and that ends up being a indecision candle for the weekly, and then we look for follow through in the next week. Okay, very, very bad for the market if price just continues to break down from here to next week. Okay, so this is giving an example. This is 2000 in 22 days, 16 trading days, price moved to about 14% lower. Okay, that's simply 3 weeks. It's 4 weeks because you have a day within that fourth week, but essentially it's 3 weeks of down movement, high volatility. Now we have earnings and again FOMC, all sorts of data happening, and so this could be a really rapid back and forth because of, you know, maybe I'm just throwing out names. It's Apple gaps up highly, and as prices lower from whatever, you know, Apple pulls up the market, and then FOMC drops the market, and all sorts of things could happen. All right, so we're looking at time and price here, and we're in this cluster now. So we're looking for a reversal on the daily time frame for this move to begin. Now, again, I'm not sure. This is the least probable situation that we just get a straight crash, but I do suspect that we'll get a nice wave one in here. And that wave one could be, you know, it could be a day or two to get to those levels. If you have the gap area here, I think that might be the lowest we'd be looking at to test that bull flag. That's around 590. So that's really a 20-point move in SPY. That's 200 SPX or ES points. That's not a small move, you guys. So this could happen within a day or two, depending on catalyst. And like I said, we get a nice bounce there, be a probability. But we're in this cluster, we're looking at a reversal. 65. And here I want to just talk about a little bit more strategy as our closest look here on the 65, a closer look. So we have FOMC coming in at 129. You know, this could reverse here going into the beginning of the week. Maybe into Wednesday, we have a low going into FOMC, and that creates a bounce. It's very possible. So you'd have our 1-2 setup, and then after that, that would be a fake move. People are happy the Fed's saving us, and then we end up dropping below that. And, you know, that could be from tech as well, helping, or any other data. Okay, so super volatile. But how we're playing this, how I'm playing this, or us in the room perhaps, is that when we get our reversal, we have puts next week, the week after, all the way out to February 21st at this point. So right in the beginning here, we're going to take profit. We're going to protect our portfolio as we come into these gap areas here. The price doesn't have to go all the way down to here. All right. And so we'll have our retracements here as well. And we'll go over to that board now. So it's still a possibility today, you guys, that this reverses and gets a doji into up to probably 598. I don't see that. That's not the probable situation, but I could see it coming back to the options expected move. That is a probable situation that we come back to test this options expected move. We break the bearish rising wedge. We have negative divergence here as of yesterday, and here on the RSI, MACD, RSI, and the slow stoke. This is already getting our early sell signal. Okay, we went through all of this on the individual names today for the individual analysis YouTube members as well. So that's $4.99 a month. Consider that. And we went through all the big tech stocks and showed how those kind of look and fit into this scenario here. Now, let's change boards. And with this, so that's the retracements to the upside. We're past all that. I really don't need that on there anymore. I'll clean this board up. We're into the time price cluster here, so let's remove that. So it's possible this is our top. And this one too, 124 cluster. All right, so I think it's very probable we have a top today And then Monday, we'll start to see, even if it peaks up a little bit higher Monday, same thing, we'll get a reversal imminent. Now, if you're a bull and a bear, here's what you're looking for. This is a bullish flag. This would be a wave 4. That was your A, B, C, and the correction is over. Now we have this move that is complete. We have bearish divergence on all time frames and new bearish divergence on the weekly time frame. I didn't show that, but this would be your impulse wave. So this would be a 1 if you're a bull, and you're looking for that wave 2 to come into maybe one of these clusters here later in next week. Perhaps here the 29th is FOMC. So anywhere in here. And what you're looking for is, let me update this, is a move down to 50, 60, even 78%. That would be a fake break from the bull flag. So I don't really like that scenario for the bulls, but it's technically still healthy at the 786. But I think it's more likely this golden ratio here, the 62%, around 588 and then 593. So I think we just talked about 590 being the top of that flag or so. So you're looking at this zone for this to be a low. Even if you're a bear, you'll probably get a bounce out of it. But remember, we know that the risk, if this just continues to cut through, then this is going to be very, very bearish, and you should just ride the bear trend and roll your positions out. But we want to take some profit, getting into the zone and expect some sort of bounce, and then we can short it again after that. So if you're a bull, you're looking for this wave 2, and wave 3 goes much higher. Okay, if you're a bear, you're looking for this to be the completed wave 5, and this is done. The entire move is over, and we're starting our first wave down, wave 2, 3, and etc. to the downside. And the Qs are making a lower high. They're not making any progress today, and I do suspect that this back tests the flag just the same way, probably into FOMC. And we look for some sort of reaction, maybe an equilibrium coming into here for the week, or just a quick bounce, volatile, and again to the downside. So we're going to be hedging a lot next week until we see some actual follow through. Okay, we hedge to the upside here, and then as price bounces, we start adding on, but we already have calls, and we're going to start taking some of those calls off and adding on to the downside, but we'll leave some calls on just in case price continues to rip, especially when you know that something's happening overnight. All right. So I'm looking for, it doesn't have to happen, but NDX made a new high here, which gave this a negative divergence. The Qs did not. Okay, so the Qs still could go a touch higher, depending on what like Apple does and such. So this high was not broken yet. It doesn't have to. You just get a little different count from NDQ and QQQ. They have NDQ is the better chart. Excuse me, I keep saying that. NDX is the better chart. Just like SPX, it's a cash index, and so you get a more clear move. This is skewed by dividends. Okay, now price targets. So we're going to have you see this week we had these options expected move at the beginning of the week. It's not biased to the upside or downside, but at the beginning of the week when we started, we could have guessed, hey, the options market says we're moving from 522 to 530, and if we were bullish on that move, then that would be our first target to go to. All right, so you can go to the trade tab on the Qs, and what we're going to do, it's going to be more accurate after the close today. 15 minutes after the close will be the most accurate, and what we want to look for is 7 days from now, so that would be next Friday here. That's the 31st, and we look at, I'll just open it up so I can separate this. So we're looking at a plus or minus 11 point move at that point. So this can change slightly as the day goes on. So if the market closed right here, right now, let's say 5:30, let's just make it easy, then at 5:20 or 19, that would be the lower end of the options expected move, about 519 if we closed at 5:30. So that would be our first target to the downside. But we know that the gap is there, and we also know that we have support in the flag here as well, so we could spike through options expected move. And just remember, when you make it from one end of the options expected move, we already made it to the top in this scenario. It's not likely that you make it all the way back or through to the bottom end of the options expected move. Now, it can certainly come back into the in-between, points in between here. And that's actually probable, is that you're close on the options expected move or within it. That's your probable situation. I'll put options expected move video that I have up above and at the end. So that would be our target, but we don't have that target yet. We need some more information, and so we'll do that this weekend. Okay. So moving on. By the way, we have a lower high here. Okay, so we're looking at this move already being started, and SPY and QQQ will finish up together, approximately together, at the end of its wave. Okay, these can be different, where this already has a 1 ABC for wave 2, and SPY does not have that high. So this still could go get a new high if something really starts to take off. We looked at Google and such. Like, there's some, Meta. We have some breakouts that are very possible that could lift this market to eke out a new high. But I'm just, it's we talked about yesterday's video. I'm not going to go over it again, but we can get a lower high here, and that would show divergence in the market. SMH, I believe, is done. We've hit our targets. We have a flag that we drew from this geometric point here to here, rejected off of that. And that's also the 786 retracement from top to bottom here. So that's a good point here. If it did end up going higher because the Qs wanted to make a new high, you have the 887 here. But this is a 1-2 setup overall. 1 big old 2 here. And again, we talked about that in yesterday's video. IWM. IWM looks like it actually wants to kind of hold up the market a little bit. We're getting over these resistances. And if this is a structure that's just going to play out just a little bit more, then we have a little bit higher that we can still reach here at the 62% retracement at the 233. And that would be the back test of that trend line that we were just looking at. Okay, 233 right there. DIA, I think, is done. We had a back test of this trend line here. I think this is over. So if the market needs to go up anymore, I don't think this is the one that's going to do it. We have our trend line broke down and back tested, and also, I don't think I did this yet, but let's look. Yeah, right at the 786. So this is actually an objective short here at the 786,445. And I might add this trade in a few minutes after this video is done. VIX. I don't usually trade the Dow and things like that, diamonds, but when it matches perfectly like that, that's a perfect setup. So I don't know if we'll get a new low here. That's what we talked about. If we do, if the market goes just a little bit higher, probably make a new low here. But we're stopping right here at the options expected move. Haven't quite touched it yet, so I think that's incoming. All right. And then after this wedge starts to break out, it's back testing again. We'll probably just have to draw it out again. And then it breaks out from this wedge. You'll see it be pretty obvious, and then we'll get a big move to the upside. But what I'm a little bit more worried about, and not worried, is that we get complacent and the VIX isn't, maybe it'll have these smaller moves and we think each and every day move up a little bit more, but not get those 10% moves. And if that does happen, it's likely that the market is really grinding to the downside and just relentless, and the VIX is just not, it's not spiking to the upside. It's just allowing the market each day to close lower and lower, and people are slowly buying the VIX. I know that doesn't sound right because we get these huge spikes here, but you notice that the market didn't really crash. It just went, if you're looking at SPY, it just kind of went down, up and down and up and down. And on these spikes here, you didn't see the market actually drop significantly like it's capable of doing at the beginning of a recession. So that's what I have for you guys. I hope that answered a lot of those questions. If you have more, leave them in the comments. I go over those every once in a while, but just consider joining the Discord. It's not much. I'm not looking to, make a huge amount of money off that. It's just, it just brings us into a room where we all can get together and bounce off ideas from with each other. All right, so thanks for all the likes and the subscribes, the subscriptions. I appreciate you guys. Have a wonderful day. Have a great weekend.